Good morning, listeners, and welcome to the Trade Talk podcast. On Wednesday, after reaching the level of 17,600, the market reversed, which was an important support for the market earlier in the past, and yesterday acted as major resistance for the market, on which we discussed in our podcast in the morning. Market breath was not that bad, but still we saw vertical decline in the market after hitting the levels of 17,600. Furthermore, weakness is not ruled out as the market reversed from the important resistance area. The next best support for the market exists at 17,300, 17,200 and at 17,100 levels. Buying and selling can be done on the basis of reversal formation on intraday basis. So we need some reversal formation after hitting the important support area. So today, after opening around 17,300 levels, we need to be careful. We cannot go short immediately. We cannot go long also. But yes, in case if we see any reversal formation, then certainly we should look for acting on the basis of that reversal formation. The reason is because today it's a day of monthly expiry, and because it's a day of monthly expiry, traders take the charge of the market and they decide the direction of the market irrespective of global cues and specific news flow. So based on the reversal formation, certainly we should look for taking some position. But while looking at the FIS positions, while looking at the option statistics, we are of the view that 17,300, 200 going to act as major support for the market. Unless and until the market is not breaking the level of 17,200, we cannot go short immediately on the market. But yes, in case if we see the market is breaking 17.2, then the possibilities of hitting 17,100 would turn bright. On the higher side, 17,500, 17,600 would be major resistance, and there we need to be careful if we see any quick bounce back towards those levels. Bank Nifty was yesterday very strong, but there also we saw some profit taking towards the end. 37,400, 37,200 going to act as major support. So unless and until the Bank Nifty is also not trading below 37,100, we cannot expect further more weakness. But the possibilities of hitting 37,200, 37,100 are bright. Now, if we see the FIS positions on the cash segment, then they are consistently selling, and yesterday they sold heavily to the tune of almost 5,000 crores, which is highest figure of last several weeks, while domestic institutions have sold 3,800 crores, which is much above the averages. In brief, hot money have no choice but to sell as the dollar index is moving upward. It was around 95, 96, now it is at 96.80. So it is gaining every day, and so if the dollar index is going to go up, then FIs have hot monies have no choice but to exit from the market. On the other side, because the Indian economy is going to do well, or maybe the outlook on the market is bright, domestic institutions are infusing their funds heavily. So broadly, we are of the view that in the long run, the market trend is certainly going to be strong. So that's why domestic institutions or maybe retailers are putting their money in the market, and all this clearly indicating us that the downside for the market is limited. So in the short term, the possibility of furthermore weakness is not ruled out, but otherwise, if there is a medium to long term view, then certainly we should look for adding strong companies, good companies to our positional portfolio. That's all from my side for the day. With this, I am ending today's morning podcast. Thank you and have a great day to all of you.